Something unusual is happening in the silver market right now, and most investors still don't see it. Behind the headlines, behind the daily price swings, and behind the calm appearance of the financial markets, silver has just triggered a critical warning signal that historically appears before major economic shifts. The same types of signals showed up before inflation shocks, banking stress, currency weakness, and massive moves in precious metals. And now the market may be flashing that warning once again. Welcome back to Pulse of Silver, the channel where we break down the biggest stories shaping the silver market, global finance, and the future of wealth protection. Today's topic is one every silver investor needs to understand, because this latest warning may be telling us that something much bigger is building beneath the surface of the economy. Over the past few months, silver has quietly started behaving differently from most other assets. While stock markets continue trying to hold near record highs, silver demand has remained surprisingly strong. Industrial buyers are still consuming large amounts of physical silver for solar panels, electric vehicles, artificial intelligence infrastructure, and advanced electronics. At the same time, more investors are turning back toward hard assets as concerns about debt, inflation, and currency stability continue growing around the world. What makes this situation even more important is that silver often acts like an early warning system for the broader economy. Unlike gold, which is mainly seen as a store of value, silver sits in two worlds at the same time. It is both a precious metal and an industrial metal. That means silver reacts to fear, inflation, manufacturing demand, and financial stress all together. When silver begins sending unusual signals, experienced investors pay very close attention. Recently, one of the biggest warning signs came from the growing disconnect between physical silver demand and the paper silver market. Physical silver inventories in several major vault systems have been tightening while demand for real metal remains elevated. Yet despite that, paper trading in futures markets continues creating sharp price volatility. Many analysts believe this gap between paper pricing and physical demand cannot continue forever. Historically, when these imbalances become too large, the market eventually corrects itself in dramatic fashion. At the same time, central banks around the world continue struggling with inflation. Even though inflation numbers may appear lower than they were during the peak of the crisis, prices for food, housing, energy, and daily living remain much higher than they were only a few years ago. Governments are carrying enormous debt loads, and interest payments on that debt continue rising. This creates pressure on central banks because they cannot keep interest rates high forever without damaging economic growth and increasing financial stress. That is where silver becomes especially important. Investors often move toward precious metals when confidence in paper currencies begins weakening. Silver tends to attract even more attention during periods when people fear inflation may return stronger than expected. And now, many market watchers believe silver's recent behavior is warning that the next stage of economic instability could already be starting. What's even more concerning is how quickly sentiment can change once these warning signs become impossible to ignore. Markets often appear calm right before major shifts occur. We saw it before the financial crisis, before the inflation surge of recent years, and before several banking shocks that caught investors completely off guard. The question now is whether silver is once again signaling that the system is under pressure. Because if this warning is real, the move we could see in silver may not be small. It could become one of the most important moments the silver market has experienced in years. One reason this market warning matters so much is because silver is no longer driven only by traditional investment demand. The world is entering a new industrial age, and silver is becoming one of the most important materials supporting that transition. Governments and corporations are racing to expand clean energy systems, artificial intelligence technology, data centers, and electric transportation. Almost all of these industries require massive amounts of silver. Solar panels alone are consuming enormous quantities of silver every single year. As countries continue pushing green energy projects, silver demand from the solar industry keeps breaking records. Electric vehicles also require much more silver than traditional cars because of their advanced electronics and power systems. On top of that, the growth of AI infrastructure and high-performance computing is increasing silver demand inside chips, servers, and communication equipment. This is where the warning signal becomes more serious. Supply growth is not keeping pace with rising demand. Mining companies are facing higher production costs, lower ore quality, environmental restrictions, and political uncertainty in several major mining regions. Many silver mines are not pure silver mines at all. Silver is often produced as a byproduct of mining other metals like copper, lead, and zinc. That means silver supply cannot easily increase overnight even when prices rise. As a result, the market has started seeing repeated supply deficits. In simple terms, the world is using more silver than it is producing. Analysts have warned that this trend could continue for years if industrial demand remains strong. And when long-term shortages develop in commodity markets, prices can react very aggressively once inventories become too tight. Another warning sign is coming from investor behavior itself. Physical silver products such as coins and bars continue attracting buyers during periods of uncertainty. Retail investors appear increasingly concerned about inflation, banking risks, and the future purchasing power of fiat currencies. Many people no longer trust that central banks can fully control inflation without creating other economic problems. This growing lack of confidence matters because silver markets are relatively small compared to stock markets or bond markets. It does not take enormous amounts of money flowing into silver to create powerful price moves. If institutional investors begin increasing exposure to silver while industrial demand remains elevated, the available supply could tighten much faster than many people expect. There is also growing concern surrounding government debt worldwide. Countries continue borrowing massive amounts of money while deficits expand year after year. In the United States and many other economies, debt levels have reached historic highs. Servicing that debt becomes increasingly difficult as interest rates remain elevated. Some analysts believe central banks may eventually be forced to lower rates again or increase money printing to stabilize the system. Historically, those kinds of conditions have been supportive for precious metals. Silver especially tends to react strongly once investors begin expecting easier monetary policy or renewed inflation pressure. That is why many market observers believe silver's recent movements are more than just normal volatility. They may represent a deeper warning about the financial system itself. And perhaps the most important part is this: silver often moves very suddenly. For long periods, prices may appear quiet or heavily controlled. Then, without much warning, explosive rallies can begin. Investors who wait for mainstream media confirmation are often too late by the time the real move starts. Right now, silver may be standing at one of those critical turning points again. Another major reason investors are paying attention to this warning is because confidence in the global financial system appears increasingly fragile. Over the last several years, people have witnessed rising inflation, regional banking failures, geopolitical tensions, currency instability, and growing concerns about economic slowdown. Even though markets sometimes recover temporarily, many underlying problems have never truly been solved. Silver historically performs best during periods when trust in financial systems starts weakening. That is because precious metals are viewed differently from paper assets. Stocks, bonds, and currencies all depend on confidence in governments, central banks, and financial institutions. Physical silver, however, carries no counterparty risk. It cannot be printed into existence like paper money. That simple fact becomes very important during periods of economic uncertainty. Recently, several warning signs inside the bond market have also started attracting attention. Bond yields have remained volatile as investors struggle to understand the future direction of inflation and interest rates. Normally, higher interest rates are supposed to slow inflation and stabilize the economy. But many economies now carry so much debt that keeping rates elevated for too long creates serious financial stress. This puts central banks in an extremely difficult position. If they keep rates high, economic growth may weaken further, and debt problems may worsen. If they cut rates too early, inflation could accelerate again. That uncertainty creates exactly the kind of environment where investors often begin increasing exposure to precious metals like silver and gold. At the same time, geopolitical tensions continue adding pressure to global markets. Trade conflicts, sanctions, military tensions, and supply chain disruptions have all increased in recent years. These issues affect energy markets, manufacturing costs, and global trade stability. Because silver is deeply connected to both industry and finance, it often reacts strongly to these broader global risks. One of the most interesting developments has been the increasing attention toward physical ownership. More investors are asking an important question: what happens if paper silver contracts no longer reflect real-world supply conditions? Some analysts argue that the futures market has allowed large amounts of synthetic silver exposure to influence pricing for years. But if physical shortages continue growing, confidence in those paper systems could weaken rapidly. This is one reason why some silver investors focus heavily on owning physical metal instead of only paper products. During periods of market stress, physical demand can surge quickly as investors seek assets outside the traditional banking system. If enough buyers rush toward physical silver at the same time, available inventories could shrink much faster than expected. What makes this warning especially powerful is that silver remains relatively undervalued compared to many other assets. Over the last decade, stock markets, real estate, and cryptocurrencies have all experienced major rallies at different times. Silver, however, has often lagged despite strong industrial demand and growing economic uncertainty. Some analysts believe this disconnect cannot last forever. The gold-to-silver ratio is another signal many investors are watching closely. Historically, when silver begins outperforming gold after long periods of weakness, it can signal the beginning of a larger precious metals rally. Some market watchers believe silver may now be entering that phase. If that happens, the move could surprise many investors because silver's market size is small compared to global investment capital. Even a modest shift in institutional demand could create major upward pressure on prices. That is why this latest market warning is creating so much discussion among analysts and long-term precious metals investors. One of the biggest mistakes investors make is assuming that financial systems are always stable simply because markets appear calm on the surface. History shows that major economic shifts often build slowly in the background before suddenly becoming impossible to ignore. Silver has a long history of reacting early to these turning points. During previous periods of inflation and monetary instability, silver experienced some of its strongest rallies. In the late 1970s, rising inflation and economic uncertainty pushed precious metals sharply higher. More recently, during global crises and aggressive money printing programs, silver again attracted massive investor attention. Each time, the move seemed unbelievable before it actually happened. Today, some analysts believe we may be entering another similar phase. Governments around the world continue spending enormous amounts of money while debt levels climb higher. Central banks have already injected trillions of dollars into the global economy over recent years. Even though inflation cooled somewhat from its peak, many experts warn that inflation may not disappear as easily as policymakers hope. At the same time, the global economy appears increasingly divided. Manufacturing activity in some regions remains weak, while other sectors continue growing rapidly. Consumers are facing higher living costs, businesses are dealing with tighter credit conditions, and housing markets in many countries remain under pressure. These mixed signals create uncertainty, and uncertainty often benefits safe haven assets. Silver's dual role makes it especially interesting in this environment. If economic growth improves because of technological expansion and industrial investment, silver demand could rise through manufacturing usage. But if economic fears grow because of debt, inflation, or financial instability, investment demand for silver could also rise as a safe haven asset. In both situations, silver may continue attracting attention from investors. There is also increasing discussion about de-dollarization and global currency shifts. Some countries are reducing dependence on the US dollar in international trade while central banks continue purchasing gold at elevated levels. Although silver does not receive the same central bank attention as gold, broader concerns about fiat currencies can still support silver investment demand. Another important factor is investor psychology. Markets are heavily influenced by confidence and emotion. For long periods, investors may ignore warning signs because optimism remains strong. But once sentiment changes, fear and urgency can spread very quickly. Precious metals markets are especially sensitive to these emotional shifts because many investors view gold and silver as protection during unstable times. This is why silver's recent warning signal may be so important. The market appears to be telling investors that pressure inside the financial system is building again. Physical demand remains strong, industrial usage continues growing, debt problems are expanding, and confidence in long-term monetary stability remains uncertain. If even a few of these pressures intensify at the same time, silver prices could react very aggressively. And because silver markets are relatively small, large moves can happen much faster than most people expect. Some investors believe this warning may eventually fade if inflation cools and economies stabilize. Others believe the market is preparing for something much bigger. But regardless of which side proves correct, one thing is clear: silver is once again becoming one of the most closely watched assets in the financial world. And when silver starts attracting this level of attention, history suggests that major market changes are often not far behind. As we close today's discussion, the big question remains: has silver just triggered the warning signal that investors have been waiting for? No one can predict the future with complete certainty, but the combination of rising industrial demand, growing debt pressure, inflation concerns, and tightening physical supply is creating conditions that many analysts believe could become extremely important over the next few years. What makes silver unique is that it sits at the center of several major global trends at the same time. It benefits from technological growth, clean energy expansion, and industrial demand, while also acting as a traditional safe haven asset during periods of economic stress. Very few assets have that combination. That is why silver often becomes one of the most closely watched markets whenever financial uncertainty begins rising. Right now, investors around the world are trying to understand where the global economy is heading next. Will inflation return stronger than expected? Will central banks begin cutting rates? Will debt problems create more pressure on the financial system? Or will economic growth stabilize enough to avoid another major crisis? These are the questions driving market behavior today. Silver's recent movements suggest that the market may already be preparing for increased volatility ahead. Even though prices continue fluctuating, the underlying demand story remains powerful. Physical buyers are still active, industrial usage keeps growing, and concerns about long-term currency stability continue pushing investors toward hard assets. If history teaches us anything, it is that major market moves often begin quietly before the wider public fully notices what is happening. By the time mainstream attention finally arrives, much of the early opportunity may already be gone. That is why experienced investors watch warning signals carefully, especially in markets like silver that can move quickly once momentum builds. For silver stackers and long-term investors, this may be a period that requires patience, research, and careful observation. Markets never move in straight lines, and volatility will always remain part of the precious metals sector. But the growing number of warning signs appearing across the economy suggests that silver may continue playing a much larger role in global finance moving forward. Thank you for watching Pulse of Silver. If you enjoyed this analysis, make sure to subscribe, turn on notifications, and stay connected because the silver market is changing rapidly, and the next major move could happen when least expected. Let us know in the comments below. Do you believe silver is preparing for a historic breakout, or do you think the market warning is being exaggerated? This video is created for educational and informational purposes only. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any asset. Markets involve risk, and silver prices can be highly volatile. Always do your own research and speak with a licensed financial advisor before making any investment decisions.